what's going on, everybody? Happy Monday. Welcome to the Dough Show. I was just looking at this. Do you want to see it? A friend of mine sent this to me. If you can see it there, I'll try to zoom in on it. It's Donald Duck. It's a little piece of art where Donald Duck throwing a tomato at a Nazi. It was made in 1942, and I thought it was interesting. In the bottom right-hand corner, it says, "Buy war bonds and stamps for victory." So it just gives you an idea of kind of what was going on in 1942. A little art piece we'll have to put up on the wall. It's actually a composition, by the way, of the play. So it's like the musical score from that. So pretty neat. Thank you so much to Carolyn for sending that. Okay. If you've never watched this before, this is the Dough Show. We don't talk about composition pieces for music. We talk about investing, personal finance, retirement, things that help you with your dough. And today we're going to talk about things that have been taking your dough, and that would have been cryptocurrencies. So we want to focus on this here for a minute. The cryptocurrency craze has sort of died down, right? It's something that's not being talked about very much anymore. So I thought we would cover it because there are going to start being more and more rumblings of the cryptocurrency. Recently, it's been put in front of the SEC to pass what they call crypto ETFs. And so there were 9 of them. So in the SEC, they were looking at 9 different ETFs. One of them was actually done by the Winklevoss twins. Remember, those are the guys that accused, or they were part of Facebook and got pushed out by Mark Zuckerberg a long time ago. But so they posted one as well. And what these guys are trying to do, these 9 different exchange-traded funds, is they're trying to come to the market so that the masses can buy Bitcoin. Because the problem right now is Bitcoin, all the other coins, the exchanges and everything, they want the money, they need the money so that bigger companies can trade it. So remember, last week Goldman Sachs said, we're not going to even bother with Bitcoin. We like it, we want to be involved in it, but there's not enough volume there for us to trade it. And so they backed off. They were making a trading desk. They decided, you know what, we're not even going to do it. We're just going to move on from what we were doing here and move on and not deal with it. Well, if they could have exchange-traded funds with cryptocurrencies, then it would allow more volume. The bad part is it would allow people in retirement accounts to invest in cryptocurrencies, and that's where I stand on it. I think it's a horrible investment for a retirement account. I think it is a perfectly fine product if you just want to try it out. You just want to sort of take your shot and see how things go. I think the SEC shouldn't tell anybody what they should do with their money. If you want to open up your own account, you want to buy something crypto, or you want to buy a coin or something, or whatever you want to do, then I think you should be allowed to do that. In a retirement account, though, absolutely not. No way whatsoever. So we're going to go over a couple things today. In your general investing life, you have retirement, which could be a Roth, it could be an IRA, whatever is best for you. And then you have what one of our customers actually coined, Mr. Michael, coined this one, personal wealth account. And this doesn't have to be one account. This could be 10 accounts. It could be real estate. It could be a portfolio of things. But these two are completely separate, okay? You have to keep them completely separate. Please keep them completely separate. Now, in a personal wealth account, such as an individual account, a joint account you may have with your wife or whatever it is, this is where you take shots on things. This is where you have fun investing in stocks. I know many of our customers buy and sell stocks regularly over here. We do this over here so that we keep all their emotion out of it and we make sure they get to where they need to be, but they do the trading over here. That's perfectly fine. If you want to buy and sell stocks, it keeps you engaged in the markets. So you understand when things are getting a little weak and when things are obviously picking up some steam. If you want to invest in pot stocks because you think that's the next great thing, go for it. That's what this is for, because this is extra money that you're using to keep engaged and build your personal wealth. If you want to use the money to buy real estate or even buy REITs in the market, then that's fine. Do that 100%. So over here would be your crypto. And you figure out how you want to do it, where you want to choose that, where you want to have your account. That's where you would do this. You could buy stocks just for fun in here. This would be your specialty stocks like we talked about. Things that seem trendy, things that people are excited about. It could be a precious metal. It could be, like we have one guy that really likes cobalt. He thinks cobalt is the next big thing. And he might be sort of right there. So he's taking his shot over here. We're not going to take gambles or take shots over here. Now, me personally, I love taking shots, right? I look at all these stocks every day, and after a while, you get a feel for them. You get to scrolling through all the stocks, you go, well, that's discounted, like Tesla. We mentioned on Friday, Tesla is discounted. Why can't you buy some Tesla for a couple days, make a quick 5%, and be on your way? No problem. You do that over here. You don't do that over here, okay? So this would be crypto, this would be your stocks, this would be property, if that's what you're into, any rental properties. It could be side business that you're building up, right? And you maybe want to create some sort of passive income there. We covered real estate, side business, could be anything, right? And so that's what this is for. That's what I think the whole crypto side should go into. So Bitcoin itself has lost, what, 60% of its value since hitting that high earlier this year? And that is highly volatile, right? There's a reason why certain investments are not allowed in retirement accounts. For example, art. Art is not allowed in your retirement accounts, right? Collectibles, shoot, you get it. Collectibles, so you got art, collectibles, insurance, like life insurance, is not allowed in your IRAs. Why is that? Why should they tell you what's allowed and what's not allowed? Because in an IRA, the things you invest in have a greater value other than the physical piece of whatever you're investing in. So let me try to think about this. So if you buy a stock and you put it in your IRA, yes, it's a piece of paper or a digital piece of paper, but its value fluctuates based on what we all think the true value of a company is. There is an underlying company where we can derive value. We know the value is greater than zero. Well, for most stocks, right? The value is greater than zero. And so while for Verizon, let's take Verizon for example. What is Verizon's fair value? Believe it or not, Verizon's fair value is basically right where it's at right now. Now, we may disagree off by a couple dollars or something, but the company has revenues, it has sales, it has products that it's pushing out, it has accounts receivable, it's got cash on hand, it's got all kinds of things that create the current stock price's value. And so the SEC says, look, you can do that because while we all can disagree on the value from time to time, it does have a value. If you were to put limited brands, that's Victoria's Secret, remember that one? So limited brands, believe it or not, has a value that's higher than what the current stock price is trading at. But it has a value. So although you're buying shares, the company itself is going to go figure out how to sell lingerie again. They're going to be just fine. They'll work it out. And so that has a value. Bitcoin has zero value, right? If you don't perceive it as having any value, if everybody all of a sudden gives up on it, it goes away. It's over. There's no company to back it up. There's no sales. There's no products. There's no nothing. And so the SEC says, we can't have that. We can't have you investing in essentially nothing that's been created out of thin air. Not that that's a bad thing, by the way, in your retirement accounts. Now, you could make, by the way, you could make the argument of the dollar if we're going to talk about that. However, the dollar is backed by the U.S. government. The thought is if the dollar were to weaken to some severe point, that the U.S. government would step in and back it up. Same with bonds and things like that. But I do sort of hear their argument there. It's not a good one. Anyways, so they want you to invest in your retirement in things that actually have an underlying value. That's why they're kind of picky on the different types of options you can use in an IRA. You can use most options in an IRA, no problem. However, there are some that most advisors or anybody managing your account for you won't touch just because they know that's a gray area with the SEC, okay? Now, another reason you shouldn't be investing in the volatile stuff here is that 1/3 of you have less than $5,000 saved for retirement. You already aren't saving enough for retirement. This is nationwide. So you're already not saving enough for retirement. Why should we put you in an extra volatile vehicle that could dwindle this by 60%? We don't want to do that, right? We want stability. We want growth at some degree. We don't want that volatility. If you look at millennials, 2/3 of millennials have nothing saved. Now, I tend to disagree a little bit with this one. Maybe that's something that's changing. But if you already are struggling with retirement, then there's no argument for someone to say, well, you should let us put crypto in my retirement account. Most of those people making that arguments don't have retirement accounts, so they shouldn't be making that argument. They're just fighting for crypto in its sort of traditional sense there. So very important. I didn't want to take too long on this one today, but it's very important to kind of understand the differences there. Now, they will keep pushing. There are more crypto ETFs in the works, and they'll probably get it through one day or another, but just know there's nothing there. And so the SEC keeps fighting back, going, if there's nothing there, if there's no value besides what people believe it to be, then how do we know that the price is not being manipulated? That's a big point. I didn't cover that a minute ago. How do you know that the price of a stock is not being manipulated? There's a fair value. Actually, every trade in that stock is monitored. They actually save every single trade. So when you see that football player 2 weeks ago, they were able to figure out, hey, something's wrong here. They got him. They probably don't get everybody, but they got him. Property, it has an underlying value. It has a fair value we can all figure out. Side business, maybe a little bit tougher, but that's something different. Crypto, there's no value. Like there's no way to understand the actual price that it should be worth. And so therefore, we don't know if the price is being manipulated or not. And so that's a big one there. Anyways, didn't want to go off too far on the crypto story there, but that's what we got. You need it in your portfolio to hedge against risk and inflation. I would disagree, Elliot. So there's no, right now the argument is diversification. About we need to have crypto to diversify against all the other investments out there. That's a never-ending argument. So if you have investment A and you're looking to diversify, you go find investment B. It doesn't need to be crypto. How did everybody diversify for the last 100 years without crypto? They did it just fine, right? So if diversification is a big thing, then well, Warren Buffett did it this whole time. He doesn't need crypto to diversify. All these big guys don't need it. The people that tell you you need it, look very closely at how they're invested. It's called talking your book. And I am very careful not to talk my book here because what it means is if you're like a big hedge fund guy, you go out on a press spree and you say, oh my God, I love this stock. The stock's incredible. It's great. It's amazing. It's going to do this. It's going to do that because you own it. And of course you want it to go up. You're not telling people to buy it. You're telling people that you think the company is good. And that's what those big guys are doing with crypto. They've all bought it all up. And it's kind of like in Florida here, there's a lawyer, very popular lawyer. He puts TV commercials everywhere. I know he's somewhat regional as well. And he wanted pot production and marijuana production to be legal in the state of Florida. He bought up the whole middle portion of Florida, about the north central area of Florida, in anticipation of this eventually being land for him. And so, of course, his message is this is a good thing. He was lobbying on behalf of everybody to get the state to legalize it. Of course he did. He lost the first round, by the way. But that's called talking your book. You didn't realize there were restrictions on what is allowed in the IRA. Yeah, there you go. Now you know. Now you know. It's got to be something that has physical value. Like a piece of art, a painting on a wall is valued because somebody else thought it was worth this, and the hopes are somebody else thinks it's worth that or more. Otherwise, it's just paint on paper, right? So the SEC says, wait a minute. Same with like collectible coins. Collectible coins could be made out of an actual metal, which has a value, but there's too much gray area there. So that's part of the crypto argument is collectible coins are not allowed in retirement accounts. So, you know, it's what it is. Yeah, it's not good statistics on the retirement thing, but I'm going to change that. I'm going to be doing a lot of speeches next year for the industry that have to do with the stats of the younger people investing. And I want to use this channel to be able to show the data to everybody to prove them wrong. So I'm hoping you guys will subscribe. All the other data will fall where it does. But if you'll subscribe, then I can show, look, these people are watching. They're interested in the topics that we have to offer, and they're engaging with that too. So hopefully you'll help me out. Is there a different strategy for HSA investing? That's completely different, actually. Hoping to be able to offer that soon to you guys. That's been a slow process for us, but we're still working on it. HSAs hopefully will come soon. Can you invest in Beanie Babies still? Man, if you found a Beanie Baby, it'd probably be worth something, huh? hedging against the dollar is just material. Well, there you go. There's your deeper look into kind of what I was saying a second ago with art. Crypto is still in a grand scheme of popularity. Yeah, now there's nothing wrong with saying there can be a new investment. Like crypto could be long-term something that's useful, but like I've said here a million times, until it's actually usable to the average person, very liquid, right? Like I want to be able to easily do it. I go on Venmo or whatever, I send you money, no problem. Until I can pay with some sort of coin very easily, it's not going anywhere. There's no use for it. It's a trading vehicle. And if you want a trading vehicle, you think you're a trader, then rather than look at crypto, look at futures. So much easier, in my opinion, to figure out. So much more volatile, in my opinion, and obviously probably fact. So go trade futures. Easier said than done. About the same, actually less money to trade it too. Bitcoin ETFs, yeah, we'll see. So Joe, what's not good about it is Goldman backing out. Goldman was going to put a lot of money in there. We'll see what they decide to do. Well, they already told us what they decide to do, but that's that. That's my opinion on that. Shouldn't be allowed in IRAs. I don't think there should be exchange-traded funds for it. I think it's a pure play. You should just trade the pure play, and that's the end of it. Not in a retirement account, though. Anyways, we'll be back at 5 o'clock to do the stock market update, the closing beat, we call it. And a lot of interesting things to talk about today. I hope you'll join us for that. In the meantime, I'll leave you with a short promo for what we're doing later this week.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.